Welcome to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm speaking to you here from New York City on the 17th day of April, 2018. I do want to remind you I publish a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. You can subscribe to it by going to miningstocks.com. And my friend Chen Lin publishes an excellent newsletter as well. What is Chen buying? What is Chen selling? Go to chenpicks.com to subscribe to Chen's letter. I want to thank each of you for listening to the show, making it one of the more popular shows on the Voice America Business Channel, and also to encourage you to send along your gripes, criticisms, praises, whatever you want to say, to questionsfortaylor@gmail.com, questions, the number 4, Taylor@gmail.com. We do want to thank our sponsors for making this show economically viable and for keeping it on the air. Today our sponsors are RN Resources, Bonterra Resources, Dynacor Gold Mines, Genesis Metals Corp, Klondike Gold, New Range Gold Corp, Northern Empire, and Novo Resources. Before I introduce today's show, let me just make a couple of comments about some of our sponsors who've had some fairly newsworthy things taking place this last week. Novo Resources has traded very well. It was up some 50 cents on Monday. Very strong performance for Novo, despite the fact there's been no news to speak of. I suspect that there was quite a bit of short covering in the stock in the recent past, and I suspect that a lot of short covering of the short sales were taking place before some news expected to come out in another couple of weeks or so. In fact, Dr. Quentin Henning is scheduled to be on my show on May 1st, and he suggested to me some time ago that he expected to have some very important news before that date. Northern Empire Resources project that I visited recently is next to the Corvus discovery, the Mother Lode deposit there in Nevada, and they're having some very good news suggesting the extension of that deposit onto their property. A lot of good things happening at Northern Empire Resources. That's one I'm keeping a very close eye on. And Bonterra Resources. Now, this is a company that I think is going to knock the socks off of investors who aren't paying attention to it. And I say that because of the dramatic increase, both along strike and at depth, of their resource and very strong numbers that they've been reporting on an ongoing basis. But even more importantly than that, although perhaps not as exciting for investors, is the fact that they came out with some exceedingly good metallurgical news, some news on the metallurgical front from tests that they've been doing, getting up to 99.4% recoveries of gold using gravity and standard cyanide leaching technologies. So those are some of the things I'd really suggest you keep an eye on. The companies that are sponsors of this show, they are sponsors not just because they are sending in money to become sponsors, but they are chosen. They are companies that I have in my newsletter, and for the most part, companies that I have put my own personal money into and companies that I believe in. So I like them, and that's one of the main reasons they're sponsors for the show. Today's show, we've got Frank Holmes, Amir Adnani, and Michael Oliver, the always dependable, reliable, and very thankful that Michael's joining us again today. I've titled today's show Flying Toward Gold Mining Profits with Frank Holmes, because Frank Holmes, the CEO of Chief Investment Officer of U.S. Global Funds, has established a fund, an ETF actually, called JETS. That's the symbol, JETS. It covers the airline industry. That's one ETF, and then he's put together a second one with gold mining shares, and that's the symbol is GOAU, gold and the symbol for gold. We want to talk to Frank about what's unique about these funds, and also just get his perspective on various things going on in the global markets, because his funds do cover the globally markets around the world. So very looking forward to talking to Frank. It's been a while since he's been on the show. Certainly, Frank is also very strong in the mining sector, and so that's, of course, another reason that we want to talk to him about that sector as well. Michael Oliver's work has clearly shown that commodities are poised for a prolonged bull market, with some of them, like gold and oil, leading the way. However, the commodity that has lagged perhaps more than any other has been uranium. But now, with hostilities growing between the United States and Russia, that may be about to change, because Russia, which had been suppressing the price of uranium in the United States since the fall of the Soviet Union, They've done so because they've sold uranium from disassembled nuclear weapons. Well, one wonders these days. In fact, I understand that that there is a movement in the parliament in Russia to stop sales of uranium to the United States and elsewhere. Wouldn't be surprising. It's not shocking given all that's going on, but that could be the thing that sends the uranium prices finally, after many years of slumber, to much higher levels. Of course, that is of great interest to Merid Nanni. As I noted, he is the president of Uranium Energy. Uranium Energy is a company that is ready to start producing uranium when it gets the right price. Right now, it doesn't make any sense. It's a very low-cost producer, but even as a low-cost producer, can't make money at current uranium prices. So it's simply sitting on the sidelines, but ready to pull the trigger as soon as the price of uranium rises. And so that leads me to say hello to Michael Oliver, because I think Michael has at least paid some attention to the uranium markets, and want to get his take on that. Thanks for joining me again, Michael.
Hi, Jay. Good to be back. Yeah,
always good to have you. Always good to have you with me, and it's OliverMSA.com, OliverMSA.com to learn more about Michael's work. Well, Michael, I know that uranium isn't the market that you pay the most attention to, but you do keep track of it. It's not been a very exciting market. It's been pretty boring, actually, for quite a while. What are you seeing about what are your momentum charts telling you about uranium?
I think it's an inevitability it's going to go up, okay? First off, commodities don't go to zero, and I think uranium has effectively gone to what you could call theoretical zero, much like grains did over the last 3 years. In other words, not zero, but it's as close as they're going to get, they just go to sleep, okay? Mm-hmm. Uranium's there. Now, above the uranium market, when we measure it via annual momentum, a long-term momentum, and we use the uranium futures, which are highly illiquid. You cannot trade them, but at least they provide us with price reference points. They provide us with price history, and therefore we can measure it, even if it is illiquid. But uranium is now $20.50, okay? I've got two levels. We've put out reports, probably 3 or 4 times a year we update. But the numbers don't change because it's annual momentum and it's based upon price's relationship to a 3-year average. Mm-hmm. There's 2 levels above us, and I won't get real specific. I've got 2 different studies I've run that say about $22.50 to $23.50, which is say $2-3 above the market. Wake up, start to get long. Okay, that's still dirt cheap, by the way. Okay, but the big number all year is any monthly close at 28 or higher blows out the top of an annual momentum base that goes back to 2011. It's a perfectly horizontal base submerged below the 3-year average. It happens that the 3-year average is critical, and if you close at 28 or higher anytime this year, you've broken through it. Now, that's a big rally from the current levels, but historically, that even $28 is not a high price for uranium.
Right.
If you look back at its
correct,
history.
yeah.
So I'm arguing that I've got 2 trigger levels, and we update them. And I would, this is a back burner market right now, but when it becomes a front burner, it can become a front burner fast because it doesn't have any public sentiment. It has no emotion attached to it. It's not highly watched. It's not excessively invested in. If anything, it's the other way. So it's one of those areas in the 4 asset categories, in this case commodities, that don't let it fool you. Just because it's dead and asleep and there's so much excitement going on elsewhere, often there's greater percentage moves out of markets like this when they wake up than you can acquire in 3 to 4 years in a bull market in stocks. Mm-hmm. So, in other words, even if you just went to the 3-year average on uranium, that's a huge percent move in itself. But,
you're seeing this now, aren't you, Michael, with your agricultural commodities, I guess, are really starting to pick up now, huh?
Yep, I think the soybeans, corn, and wheat have broken out, and I think they're in the beginning phase of a new bull market, and I think they'll beat other commodities this year, even gold on a percentage basis, now I'm speaking. Mm-hmm. Beat oil. I think they'll beat copper. I think they're the best place to be in the commodity arena this year. Obviously, they weren't in 2016 and 17. But I think in 2018 they're going to be the front runners. Just sort of a catch up, They were the dogs of the Dow, so to speak, and now they're now going to be the front runners.
All right. With regard to equities, you sent a note to me this morning. You said it's messy. It's a messy stock market decline. Mm-hmm. can you talk about that a little bit? You're sort of referring back to 1977 to 1980, something like that.
There was a big transition in asset class preferences back in the mid-'70s through 1980. As we recall, that's the period when gold made a low after a move to $200. It dropped back near 100 in 1976, and it went to $850 by 1980. Well, during that period of time, commodities about a year later joined gold, and we had a huge commodity bull market. And stocks, which had had a big recovery from their 1974 bear market low, they had a 50% drop to get to their 1974 low. They recovered along with Federal Reserve help, of course, nicely into 1977. So they had a two and a half year rally, big rally. It wasn't like our 9-year rally, but it was big, nice recovery. But then they went dead and they went back down and really didn't go anywhere on the upside until 1982. But the top in 1977 is something to study if you're a price person, and we are also. We look at price as well as momentum. But that was an example of a protracted, excruciating bear market that took forever to get its downside out of the way, and never really did collapse, but just persistently lost value. And go back and look at other tops in the markets. 1929 is an exception. Most tops don't occur that way. They're more like 2008, which was, if you recall, there was a lot of topping in 7, back and forth, a lot of teasing. And then you dropped in early 2008. But then what did you do? You came all the way back up to almost unchanged on the year, like, it was May of that year. Okay, you're almost unchanged after having a sharp drop. Well, here we're coming up on May, and and we had a sharp drop in the first part of the year. We're having a rally into the spring. That happened in 2008 as well. It wasn't until late summer of 2008, in layered collapse manner, that you finally really did give it up. And that wasn't until October of 2008, the collapse that finally ended in March 2009. So protracted, laborious, redundant type moves in stock markets to the downside are common. Expect them. Being a bear in the stock market is not going to be easy unless you're trading in and out every 3 days, which we don't do or advise. It's not our. We could do it if we wanted to, but we're not. It's not our arena. We're looking at the big picture, and the big picture says if you're in stocks, get out, or balance your stock portfolio with long emerging markets and long commodities. Particularly grains or grain equivalents, things that are benefited by grains. And so balance yourself out. Get out of the stock market. Don't necessarily go short. There are better things to do in the world. Probably long grains is going to be better than short stocks.
Okay.
But it's going to be tough. Psychologically.
All right, Michael, we're just really out of time here, but I have to always ask you about gold. What's it going to take to get above that magic 1350 level?
God, it's asleep. It's been above 50. Intra-week, last 2 weeks, we've been up in the mid-60s. But it just will not close a month out above 1350, but it also will not collapse. It is totally no volatility. It looks like the dollar, in effect. I think maybe there is a relationship now between them, and I don't think that's always true. Dollars asleep as well. T-bonds are asleep as well. So there's a whole bunch of big markets out there that are literally asleep, where you can draw a line horizontally going back 4, 5, 6, 7, 8 weeks, and it's kissing your sister. It's sideways. And I suspect you'll have a wake-up in a lot of these markets very soon. And I suspect...
Well, certainly one that some of us are hoping would finally wake up is uranium, and we're going to be talking to Amir Adnani right after the break. Michael, I want to thank you again for being with us again. Always a pleasure having you. Your ideas, your work, your laborious efforts that you pass along really pay off for your subscribers. And if people are listening to Michael, you might want to consider subscribing, because that's the way you can really benefit. He kind of gives us the big picture here, but the way to really profit from Michael's work is to sign up for his work. Thank you so much, Michael, for being with us. And